Seema, Shah, stay with us for a hot second here, because after the Fed's much anticipated rate hike, Chair Powell said they will assess incoming economic data as a whole to make upcoming decisions. Take a listen.
We will continue to make our decisions meeting by meeting based on the totality of the incoming data and their implications for the outlook for economic activity and inflation, as well as the balance of risks.
So with inflation providing mixed signals, could incoming data be even more important now? Seema Shah, Principal Asset Management Chief Global Strategist, is still with us. So Seema, want to get your reaction first to what Fed Chair Powell said, not only in that clip, but kind of in totality or in whole yesterday, in terms of their pathway forward here and how we might see that continue to show up in some of the key economic data readings.
I mean, the big takeaway from yesterday was really that Powell kept his cards very, very close to his chest. He didn't really reveal anything with regards to forward guidance. And I think that makes sense because they have been reiterating the data dependency of their approach. And between now and September, as he said, there are 2 inflation reports, there are 2 jobs reports, and a huge multitude of economic data, which is really going to shape their decision-making process going forward. So I think all options are on the table. A lot of the GDP data that came out today probably raises the risk of another hike. So we have to just, I guess, continue to watch how that data unfolds from here.
Yeah, I actually thought it was kind of funny during the press conference yesterday, Seema, because the various journalists kept trying to ask him in a lot of different ways, what are you going to do next? And he kept saying effectively, I don't know what we're going to do next. And nobody wants that answer. Nobody likes that answer, but maybe that's just genuinely the answer. He has no secrets that the rest of us don't have because none of us have the data, right?
Well, exactly. You know, that uncertainty for analysts of what is coming around the corner is shared by the Federal Reserve. And actually, with the ECB, they've just had the decision an hour or so ago. And Christine Lagarde, the ECB president, is repeating a very, very similar line to what we heard from Powell yesterday, which is, you know, this is all dependent on the economic data and how it unfolds. So this isn't actually just a US issue. This is a global issue where we don't really have a very, very strong conviction on where things go from here. So it does make sense for central banks globally to keep all the options on the table. And we may well see another interest rate hike from here. That still is a possibility. But again, it's going to depend on how the growth data is going, how the inflation data is going, as well as, of course, the labor market, which is particularly important.
Yeah, on that front, of course, we did get, it's backward looking, of course, but we did get that better than estimated GDP data. We got durable goods by some measures coming in quite a bit stronger, although those are volatile figures. I'm curious what you're going to continue to pay the most attention to. Is it going to be something like PCE, which the Fed has said it does, or you know, what are your sort of key charts to watch?
So for us, I think the one key thing is going to be anything to do with the labour market, because we have heard from Powell several times the importance of seeing the labour market rebalance, seeing a little bit of softness. He did say yesterday that historically, when interest rates go up, you should typically see some kind of softness from the labour market, which they're yet to see. Do you remember the unemployment rate stands at 3.6%? That is where it was at the beginning of the interest rate tightening cycle last year. So we need to see a bit of that change. If we do see that change coming through, then I think it's fair to say that maybe the Fed has stopped its tightening. It's kind of reached its peak. But if you see the labour market staying as strong as we have seen for the last few months, I think there is still a potential for another rate hike.
We had heard this term growth recession in recent conversations. Is that something that, you know, we should be kind of considering even more right now, considering some of the strength in or the labor market where there have been some cracks, but overall the broader trend has still remained intact, or even on the consumer front where there still is this resiliency or this strength within the consumer that's being exhibited?
Yeah, I do think it's a valid outcome that we could expect. So from principal asset management perspective, we are expecting a recession, but it's going to be such a shallow recession in our view. So this is a 1.5% peak to trough decline, incredibly small from a historical perspective. 2 quarters, again, very, very short from a historical perspective. And in that scenario, if you were walking on the street, you wouldn't necessarily know that there's a recession around you. We're only expecting a small increase in the unemployment rate. So that is still that strength factor does come through. It might show up in the data as negative numbers, but But actually, in terms of the financial market, you may not see meaningful pullbacks, even in a recession outcome.
Very interesting and a good reminder for folks. Seema Shah, Principal Asset Management Chief Global Strategist. Good to catch up with you as always.
Thank you.